Today on the show, I have the pleasure of welcoming back a really good friend of mine to this show, Todd Dexheimer. Now, Todd is the principal of Endurus Capital and VitaCare Living. Now, for those people who don't know who Todd is, he started investing way back in 2008. And today, his company owns over 4,000 units of multifamily and senior housing. Todd has also completed over 150 flips, including a 20-unit mobile home park and a ski resort, while using profits to build his own rental portfolio. Today, he focuses on syndicating large value-add senior living and multifamily properties in emerging markets across the United States. And he was actually also on this show way back in 2018. If you're interested to take a listen to that, head over to RG 135. It was all those years ago. But enough out of me. Really excited to have him back on the show. Let's get him out here. Hey, Todd, welcome back to the show. How you doing today, mate?
Great, man. I'm doing fantastic, and pleasure as always to see you and talk to you. So, mate, good to be here.
Thank you very, very much.
4 years ago, man.
I know. It was. I didn't think it was that long ago, but
it's crazy how much changes in 4 years. You know, you look back to. I'm sure you were on my podcast likely about 4 years ago, and you look at the differences of 4 years ago to today. It's just amazing, isn't it?
And I'm actually shocked at the 135 number. I thought you'd be like, episode 30 or something like that. Because I feel like I've known you for such a long period of time. We've sort of started at around the same time and been running the same traps. So it's good to see all the success you've done. And I think the real sort of tip of the hat is like showing people that you have to be consistent at this business, right? It's not just going to happen overnight. Like I just mentioned in your story, 2008, you've been starting. But I won't take that away from you. Do you want to give us a little bit of a background, a 30-second elevator pitch, or your background for those people who may not have heard the episode 135 and just bring us up to speed what you're doing today?
Yeah, sure. Well, I'll give you the quick story. You definitely feel free to dive in with more questions, but started like you said in 2008. I used to be a high school teacher. That was a long time ago now, but I taught shop class. I taught woodworking and metals and all that kind of stuff, and started cutting my teeth through flipping houses. Actually, my goal very early on was to buy apartment buildings and to buy a bunch of them and to own, I thought if I could own 1,000 units, if I could only own 1,000 units, that would be amazing. And one day I potentially will get there. But I didn't know how to start. So I started buying single family homes as rentals. I bought some duplexes, quickly ran out of money. So I started flipping houses to generate cash to be able to buy more rentals. And so that's kind of how I moved along. I did about 150-ish flips. I had 100, 1 to 4 family rentals and a couple of smaller apartments and some mixed use commercial and stuff like that. And then about 2015 or so, I started going, where do I want to go with this business? And that's what really led me into the multifamily space and where I am today. And through many paradigm shifts, right? It just didn't happen overnight, but through many, paradigm shifts and a lot of time and effort, I eventually graduated from doing 1 to 4 family to 10 to 20 unit to 100 plus unit. And like I said, that's where I am today. We syndicate value add 100 plus unit apartment buildings, also own some senior housing, own about 400 units of senior housing, and then have a couple of different commercial buildings, a retail. Actually, we're just about to close on a retail strip mall and have an industrial / office building as well.
Wow, that's incredible. Are you all in the same market since when you first started?
I'm not. So I'm based out of the Twin Cities. Everything I did when I first started was the Twin Cities, or maybe dipping into Wisconsin a little bit, but everything was pretty much based there. And then, I started investing out of state kind of when I was making that transition. And that transition was like, I looked at the cash flow versus the flips, and that was what made that happen. But I started going into Ohio, and Kentucky, and still kind of in Ohio, Kentucky, Tennessee, and then Minnesota, Wisconsin is most of the assets.
So Midwest, not necessarily Sun Belt, right?
Yeah. Right now, don't really have anything in the Sun Belt. I mean, Tennessee is closest to the Sun Belt, I have, but yeah, we definitely like the Sun Belt, look in the Sun Belt, but just don't have anything there right now.
That's interesting. No, it's interesting as everyone talks about Sun Belt, and like you have a bit of just knowing you, and in the introduction I mentioned you've been involved in a ski resort, which is a weird thing to be involved with, but it's that contrarian view of not going where everyone else is and finding there's still good deals in other parts of the country. You just got to understand what you've got to look for. So that's awesome. And what the company you mentioned earlier, 1,000 units. If only you could get to 1,000 units. What did that mean to you back then, and what does it mean to you now?
Well, I think for me it was like, whoa, 1,000 units. Like, first of all, it was a big number. It sounded really cool. So I think that was like, it's not like it was that amazing. Like, there wasn't that much thought into it otherwise, other than, wow, that was a really big number. But then, I think I was here listening to somebody say, you can make $100 a unit or expect to make 75 to $100 a unit. That's kind of should be your goal. And I thought, wow, if I got 1,000 units, I'm making 75 to $100 a unit. That's pretty amazing, right? I don't have to work again. And that was honestly like my original, like, just kind of knee-jerk thing is I just want to do that and I don't have to work again. Now I couldn't imagine not working. I just like love everything I do. So I don't know exactly why that was a magic number. It was just some 25 or 6 or whatever it was. Like, that's all I was thinking of. Now, what's 1,000 units mean? What's 4,000 units? What's 5,000? We're approaching 5,000 units right now. And it's like, it doesn't really mean much. It's more of how we're growing the business, how we're showing up, what kind of impact are we making? How are we changing lives? How are we changing communities? That's more important to me than just some number. Right.
Yep. No, I think that's so important as you grow as an entrepreneur. Things that you held on to early on in your career, the escape in the day job, or got to get to this number and life will be set. There's always going to be another mountaintop to scale, and it's 100%. Always you got to enjoy the journey. And I think that's what you're saying now. Like you're focusing not necessarily on the number, but more the impact, and that's important as an entrepreneur, as an investor, just as a human, right? It gives you purpose rather than just because in the beginning we all do it as an inward. I want to escape the day job. I want to have financial freedom for my family, and then when you get there, you think, well, what's next? I remember when I left my day job, and it was for the longest period of time. It was like, quit. And then I got there and I was like, well, now what's the new North Star? Like, what am I building? What's the next 10 years going to look like? It took me 7 years to get me to where I was. And now it looks a little different. And I love that. I guess the question back to you is, what does the next 10 years look like? Given that, you and I have been friends for over 5 years. I've had you on the podcast 4 years ago. You've been doing it since 2008. What does that look like now?
Yeah, obviously 10 years is a long time from now. What does it look like? When I look at what 10 years from now looks like, it's probably going to be a lot different than what it truly is. And my values, or not, I should say my values are my values, but what I value as being important right now is probably going to be a lot different in 10 years than some of my philosophies and stuff like that. But, if I look forward, I look at, I want to create a business that can continue to make impact. And so I really want a business that I'm positively impacting my employees, my staff. I want to positively impact the communities that we're doing business in, and I want to positively impact the tenants, that are residing at our buildings or renting from us. And of course, provide, great returns for our investors. I really want to create this kind of community, and it's all about impact for me right now. It's certainly, definitely there's the selfishness too, right? And I want to create a wealth and income and for my family, for myself, and kind of that legacy. That's the other thing I think of a little bit more. just creating more impact with my family as well. And it's not about just the wealth, but that definitely has something to do with it. And the other day, I was able to make a nice donation to my church, and that's the other thing I look at it, just like, man, how nice, Reed, would it be? I'm sure you have some passions that you really, really, really get you going. And how nice would it be just to be able to go, oh, they need 500,000 or they need $1 million or they need whatever, name the amount. I'm just going to write the check today. And I know it's going to make a massive impact. And I don't need anybody to pat me in the back. I don't need anybody to even know I did it. I just want to be able to do it and know that, it's almost more fun. So I made this, nice donation to the church, and it doesn't matter how much it was, but it's nice to hear people talking and not knowing who did it and just going, wow, that was really cool. And I went, somebody said, can we find out who did it so we can write them a thank you, letter? And it's just kind of like, cool.
Giving back.
Like, no, you're not going to find out who did it, but really cool to like hear that. So it's just, that's what it's all about now.
No, I think that is really important, and having impact in one's life and being able to give back, because that's the purpose of, going back to what I was saying earlier, is that those goals, those North Star changes as you progress through your entrepreneurial life. And I like the fact that, and I sit in the same boat as you, when I first moved to the US 10 years ago, I had no idea I'd be sitting here talking to you about 4,000, 10,000, whatever the units, right? And the last 10 years has been a freaking awesome ride. The next 10 years, when I'm 36, when I turn 46, like, it's going to be even better, right? Like, and it's sort of the surrender is also, it's not that I don't have a path or I don't have a North Star. It's just like, I'm not tying my value to 20,000 units or $1 billion or whatever that might be. And when those shackles come off, and you get to do the giving backs and the realizing more, I think you grow as you just grow a little bit more. I can't put my finger on it, but it's nearly like a stress has been lifted. Like, I don't need to prove it to myself that I can go out and buy 1,000 units. I've already done it. Thus, this next 10 years, I can take that pressure off, because I'm just going to continue to do what I'm going to do. So
look, I mean, goals are always great to make and have these values and this vision. I think it's really important to be looking at that stuff and understanding what your goals and your values and your visions are. But also, you have to be able to understand that that's always changing. And as you move along your journey, that it's okay to change and disrupt your goals and your vision, and just always be evolving. Part of, I think, what makes an entrepreneur success journey exciting and an entrepreneur successful period is that they go through these paradigm shifts in life. And I mean, think back, I'm sure you've got 30 paradigm shifts if you dive into it. I can still remember thinking about wanting to buy a 100-unit building, but just not knowing how to get there. And it was simply a few words from a mentor of mine that made me go, whoa, you're right. And I'm going to go buy a 100-unit building. And it was within like 2 months of that conversation that I had a 100-unit building under contract. Wow. And it was just this simple like paradigm shift. It was my own mind holding me back. There was nothing else. And those who are listening, you're going to go through the same thing. You're in this paradigm that you've got right now. You have limiting beliefs. You've got certain things that you're expecting, but you're going to continue to evolve and grow. You've got to be, I think the most important part, and my guess is, if you look at the entrepreneurs that are successful, is they're willing to go through those, right? They're open to it, and they're expecting it, and they're wanting those challenges. They're wanting to be uncomfortable. That's the people that are successful. Those who just kind of flounder around or get to a certain point, they just don't accept it, and they want to be comfortable. They don't like that unease, right?
Yeah. No, I could only imagine that, how uncomfortable you would have got to go and put that 100 units under contract back in the day. Yeah. It would have been a real big paradigm shift and a push outside of your comfort zone to say, just even putting the pen to paper to write the offer. Am I doing the right thing?
Yeah, especially after I was buying duplexes and fourplexes and stuff like that. I mean, that's what I was buying. And all of a sudden to go to this 100, who am I? Like, and I know you did similar. And it's just like, it's kind of an odd kind of transition, but it's just, you have to allow yourself to take those risks. And again, to get outside your comfort zone, that's the only way you're going to grow.
Right. I completely agree. Let's shift to today, right? What are you seeing in the markets and how are you reacting to inflation and the rising interest rates, which is just, we've gone from 0% to, you read some papers and they're thinking it's going to be 4% by the end of the year. Yeah. How are you handling that? And are you seeing opportunities? Are you seeing falling knives? What's going on in your world when you're looking at new deals?
Well, certainly we're looking at what the potential risks and the downside could be. That I think any smart entrepreneur is always looking at that. And let me just go back real quick. Okay. When I first started, it was 2008. The world was literally crashing. Everybody was losing everything, ducking under their house, they lost their house, so ducking under a bridge to make sure they're not going to get hit by the falling rocks that were still coming down. But when you actually look back and open your eyes and you say, well, 2008 was a fantastic time to buy real estate, right? 2009, 2010, a fantastic time. I can remember back in 2014, maybe 15, there was rumblings of a double dip recession. We were going to go through a recession. I know several people that sold a lot of properties or all their properties. I know one guy who had many, many units and sold all his whole portfolio because the market was going to crash. 2018, the market was poised to crash. It was going to crash. 2019, 2020, COVID hit. The world was going to end. 2021. Now 2022, what are we having? Interest rates, inflation, war in Ukraine, all this crazy stuff. The world's going to end again, right? My point of eventually we're going to have a recession. Eventually things aren't going to go perfect, but the world's going to continue. And there's opportunities that are going to continue to be out there. So what you have to understand is how are you buying your assets? How are you running and operating your business? And make sure you're doing it in a sound way that's going to protect yourselves from those potential downsides that mostly don't happen, but every once in a while do happen, right? If you just look at the pure economics, I mean, upswings go for a pretty extended period of time, and then a downswing happens for a very short period of time. Okay, let's make sure we can hold through those down periods, because then the up period happens again. It's just how the economy works. So that's how we're looking at things. How long can we hold these assets during a downtime? What's our stress tests? And okay, with that being said, does it make sense to continue to buy? And the answer for us is yes, it makes sense to continue to buy. Now, would we be okay holding and not doing anything? Absolutely. But give me the date that a recession is going to happen and tell me how deep it's going to go.
No one knows.
Perfect. You gave me the answer. So why am I going to sit around and do nothing for 2, for 3, for 5 years waiting for this recession that's going to decrease properties by 1%, 10%, or 50%? Because we don't know. So we're continuing to buy. We're trying to be smart about it. And we're trying to understand how much downside we have, which again, we can never predict exactly, but we want to be wise about what we do. And as long as we do that, we feel like we have a really good chance of making it through whatever recession, whatever gets thrown our way.
Mm-hmm. No, I agree with all of those statements in terms of how to look at opportunity, right? It's, as you say, no one knows exactly when it's going to hit and how deep it's going to be and for how long, but you have to be consistently being consistent around looking at deals, hanging around the hoop. I think it's a great time to be buying assets. In terms of that downside protection, one of the big things people are skittish about are lending, right? The lending environment.
Yeah.
What are you doing these days, rate caps? Are you getting floating rate? Are you getting fixed rate? Are you buying the caps? And if so, have you got assets that are coming out of rate cap holds, and you got a bit of exposure there? Like, how are you navigating that right now?
Yeah, I mean, look, I prefer if we can get a fixed rate. I think that's kind of always been the safest way. But the reality is we're doing value add. So a lot of times we're getting floating rate debt. Mm-hmm. However, quite frankly, I'm kind of okay with it. It's not perfect, but look, I think we're going to see interest rates continue to rise, but they're not. My gut says they're not rising. They might go up to 4%. Like you said, the Fed rate might go up to 4%, but is it going to go up to 6, 8, 10%? I doubt it. Like, I just have a hard time believing that it will. So if we can lock in something right now, and it's a term for 2 to 3 years, I feel like in 2 to 3 years, there's a really good chance rates will be at or below the level they are now, or what we actually need them to be. So I'm kind of okay with it. Where I think it's going to hurt people are the people that locked in, 3 years ago or close to that, and theirs coming due right now, and they underwrote at either a refinance or, they underwrote for their interest rate to be 3%, and now they're sitting there at 5 or potentially higher percent. That's where it's going to hurt people.
I think you're right. And in the same breath, are you seeing in the deals you're looking at a cap rate expansion now?
A little bit.
Take it back a year ago. I think everywhere across the country, would be around a 4 to 4.5%, right? Like, I don't think there was a market you couldn't, a market that's poised for growth that you couldn't find. And you probably even sub that, Phoenixes, the Austins, the Dallases, the Denvers, they were starting to match cap rates on the coastal cities, the Los Angeles, San Franciscos, the New Yorks of the world. Yeah. What are you seeing?
The Midwest.
Even the Midwest.
Yeah.
Right.
You maybe got 25 to 50 basis points, higher cap rate, but you're still seeing 4.5 to 5 caps versus 4.5,
Right. So are you seeing that shift now to be above 5 in your markets?
I would say we're seeing a shift a little bit. I'm not seeing a big shift. I'm not seeing this, at least not yet. Well, I'm not seeing this big, massive shift. So I think there was a small time period and when everything started really getting shaken up, let's call it April, May, June, that we're seeing properties that, you'd expect 30, 40 offers on, right? And now all of a sudden they're,
which is insane in itself. It's insane. Yeah.
But now you're seeing 1 or 2, you don't even see that many people looking at the deal. That's what we were hearing for brokers. And so we thought, wow, this is going to be amazing. But we didn't see that big of price reductions. I think sellers are kind of just holding tight. Buyers are not quite ready to come to sellers' terms. Or I shouldn't say they're not as many buyers are. So I still feel like there's enough though to where sellers don't need to adjust that much.
Right. No,
what are you seeing? Are you seeing this similar?
I'm seeing something similar. We did a deal in April, which was right as sort of the shift. The sort of, I think you could definitely argue is the peak. And we've definitely seen markets come off, which has got to be brutally honest, got me a little bit. Geez, do we buy at the wrong time? Are we buying a falling knife? All those sort of things. But to your point, I've got a 3-year cap on it. I've already hit that rate cap already, to be brutally honest, which was a 6%, which is the spread plus the SOFR. But the floor is 0. So if it comes back down, you get the upside. We modeled that in. We showed investors, all the downside that could happen if this was at 6% for the entire 5 years. What does a return look like? Well, it's definitely different to what if you average at mid-4 interest rates, but you're not losing people's money, right? So I think that's still the fundamentals there. I'm definitely seeing in general there is a bit of like, I hunt in Phoenix and I hunt in Texas and I hunt in the Carolinas. The Carolinas are more seeing a price adjustment quicker. Phoenix is not so much. But I'm also looking at slightly different deals. Like I'm looking at tax abatement deals. I'm looking at LIHTC deals that are burning off in the next 3 years. So I'm looking at stuff that I'm not going to get as much competition on, and I still believe in the value add. So there's little, and maybe solving for high tax rates in certain states like Texas, where the tax rate is insane. Yes, I am seeing, but I do think there's still a shift to come with sellers having to readjust even further. Now, depending on who you listen to, and I love your opinion on this, is there more pain to be felt? I don't know the answer to that yet. And I don't know if you read what the Fed is saying up in, what was it, Jackson Hole, they're keeping them high for a little bit, for a foreseeable future. So I think the market was trying to price in Q1, Q2 next year, starting to see a reversal. But I think you're seeing Jay Powell really trying to break the back of this inflation. And I think you'll be in, a quote unquote higher interest rate environment for at least the next 6 to 12 months. That has to have an impact on sellers' expectations. I think we're still too fresh in it, only being sort of less than 6 months into it, where sellers like, no, it'll come back, and it just won't.
That's going to be the interesting part, because I agree. I think it's going to be 12. I think it's going to be 12 plus months, 12, 18, maybe even 24 months, because I don't think we have necessarily an inflation problem based on what interest rates are at. I don't think interest rates are going to make as much of an impact as what Powell thinks they are. I think we've got inflation based on supply and labor issues that are going on. And that's a long-term outlook. I mean, that's not changing tomorrow. So I think we're in an extended inflationary period of time, which means interest rates will be up for a long time. If that's the case, which I believe it is, then I agree. You're going to see some sellers that need to sell. There's a couple of reasons why you're going to have sellers that need to sell. One is you've got institutional type funds, you've got syndications that's their clock, and they have to sell. And quite frankly, they're probably still going to do really well. They bought in, let's call it 2018. Now it's 2023. It's their 5-year cycle, and they got to sell. And 2018, man, prices were way cheaper than they are right now. Prices could drop by 20%, Reed, and they would still do well, right? So they're going to sell, and instead of selling for 20 million, they're going to sell for 19 million. Oh well, they're still going to return their investors 22% IRR or whatever it ends up being. So that's one seller. The other seller is the person, the company. Like I was saying, they locked in 2020 or whatever it was, and their interest rate was super cheap, and now their loan is at that point where they have to figure out what to do next. And they might not have, if it was an interest only, they didn't build much equity. Maybe they don't have enough equity to refinance. Maybe the interest rate is just too high. They can't, or they go, man, it's not worth it, whatever it might be. And they're willing to sell and take a bargain. The question is, how many people are going to be in that position to where they're willing to sell and take a bargain? And so how much is that bargain going to really take place? And then there's a ton of money sitting on the sidelines. There's a ton of money out there. So what does the money supply look like at that point in time? And, how hungry are they for deals? Right.
Yep. I completely agree. There's also going to be the people who buy in this time and, can continue to hold for a bit longer than what's normal. I do think you're seeing some price adjusting across 10 to 15% already in some markets. But I don't know if you're going to have a deep-seated recession like 50%, or the 120K a door is now the new 80K a door. I don't think we're going back that way.
So fact check me on this, Reed, but over the last 200 years, real estate in the U.S. has crashed more than 10% only 4 times.
Wow.
And I'm going to probably butcher the first 2 dates, but it's something like 1836, 1887, 1929, and 2008.
Yep.
Okay. That's it. And so people who are holding their breath, waiting for a massive crash in real estate might be waiting a lot longer. Now, doesn't mean they will. It could happen again, certainly. But the history tells us that these are not consistent events. They don't happen every 5 years. They don't happen every 10 years. They happen every 50 years.
No, that's a good start. I didn't realize the stuff back in the 80s. And you said more than 10%. Is that what you said?
More than 10%. So, 1980s definitely had some issues. 1990s definitely had some issues, but it wasn't big price drops. On average, the markets went down a couple percent.
Yep. But it's definitely, for all those listeners out there, definitely go fact check that. But I do believe in the sentiment that you're trying to establish is that it is long time between drinks on these huge corrections. Yeah. And people are comparing what we're into today versus the 1970s, but and the people are thinking, it's got to be a repeat of the 1970s, but you can only look at history so much to see how to try and identify trends. And history is a very good indicator of what's going to happen in the future, because us as humans, we tend to do the same things over and over again. We're stupid, right? we get too far away from the last recession. We forget about what happened and we make the same mistakes again. So it'll be interesting.
But things are always different too, right?
They are.
And what was different in the 70s and 80s? I mean, we didn't have institutional buyers back then. You didn't have 401ks were not a thing. We didn't have a REIT. What is that? Back in, who knew what a REIT was back in 1970? It wasn't a thing. There's so many differences now. A Chinese investor investing in the U.S. in 1970, that didn't happen. It was the guy down the road that had a handshake deal that had the capital to do it. It wasn't what you see today. It's totally different. So we've got a totally different market, especially in the commercial real estate, than we've ever seen before. And again, I'm not trying to say I'm not the super bullish person, probably less bullish than most, but it's just a lot different. It's fascinating, but it's also very challenging to figure out where we're going, which is why I go back to my first point of, look, be smart about what you buy and have your set criteria and stick to it. Yeah.
And be consistent around underwriting those deals day in, day out, because you're going to see, it's not sexy, but the more deals you underwrite, the more key performance indicators you can see, and how things are shifting from, okay, what was sales prices 2 years ago? What are they today? Where's interest rates today? Where's insurance pricing? Where's the debt? All these things, you mix in a pot and you'll be able to produce the soup that you can then make an educated decision and say, I want to go ahead with that deal or not. It makes sense for me or not. Am I protecting my investors' downside or not? Todd, one thing I want to ask you before we wrap up the end of the show is, we've known each other for many, many years now. What's been, looking back on the career that you've created, what's been like one of the biggest mistakes or failures? Now, we're talking about successes and there's growth and 1,000, 4,000 units and mobile home parks. But what has been the one thing that stands out that's like, ow, I hit my thumb?
So, I mean, I could list a number of them. I used to not use attorneys and think I could do it myself. But that's exactly what it is. So it's the bigger picture is, I thought I could do everything myself. If it needed to get done, it was my job to do it, because I'm the owner of the company. The buck stops with me. So I'm going to make all the decisions. I'm going to do all the work. Everything's on me. And if I can't do it, nobody can do it better than me. And so that philosophy was probably the biggest kind of hurdle to my growth, the biggest mistake. And I still, to this day, struggle with some of that, and always have to find different ways to make sure I'm taking myself out of really messing up my business,
Getting out of your own way.
Yeah. So, I mean, do I have time for a quick story?
Sure.
I mean, I got 50 of them I could tell you, but, one of my favorite ones that, is flipping houses, and I load my car up and I'm driving down the road, and I got my Nissan Altima and I'm loading. I got 2x4s. I got concrete bags. I got all kinds of stuff in there. It's riding, sitting there at like a 20-degree angle, butt down to the ground. And I'm sitting there looking at the sky, driving down the road because it's so loaded up. And I hit this railroad track, and my whole back end just goes out, shock, strut, the whole works. I got to limp into the service station. Luckily, that was like 2 blocks away. They probably strategically placed it there because they knew those railroad tracks were pretty rickety. And I'm sure it's happened before. So I go limp in there. $5,000 later, probably $5,000 or more. I have a fixed car. I had to rent a car for a couple of days till it got done. I got a fixed up car. But in the meantime, I'm sitting here going, what am I doing? Like, what am I doing? I'm grabbing materials for these guys that are working on my property. I'm a delivery driver. Like, what the heck am I doing? And so I find out that, Home Depot will deliver for free. And then I find out that Home Depot will actually send a guy to my property and do the whole material list takeaway. And I'm like, what? Why am I not delegating this stuff? And so that was a paradigm shift to go, I got to figure out how to give stuff away. And it continues. Again, it continues to this day. Here's an exercise I would challenge like all your listeners to do, yourself to do. I need to always do this. And I would say do this once a quarter, potentially even more. But take an inventory for at least 2 weeks in a row of everything you do. Write it down, everything you did during that day. And do this for 2 weeks and grade it 1 through 10. 1 is something you don't like doing and it has zero value to your business. Okay. Or maybe it needs to get done, but it can be done by somebody that you could pay $10, $15 an hour. Okay. A 10 is something you love doing and absolutely moves your business forward and gets you closer to your vision. Okay. And then everything in between. Right. And so the goal then is to take all the 1s, all the 2s, all the 3s, and so on, up to maybe 7, and get rid of those and hand those over to people that can take them for you. And be left with only the 8s, the 9s, and the 10s. Now, how sweet, Reed, would it be to be left with only the 10s, only the stuff that you wake up every morning and you go, this is what drives me. This is what moves my business along. And I know I've got an amazing team behind me that's doing the 1 through 9s. And that's what drives them, by the way. My bookkeeper and assistant, it drives her. She loves doing the work she's doing. It drives me nuts doing the work she's doing. So why am I selfish in doing that work myself? I'm giving her a good paycheck and she's doing what she loves. How awesome is that? Like, yeah, that's impact, right?
Right. No, it's true. And there's so many ways there's another way I do it as well. I break it up into black, blue, red, and green time on a Gantt chart, where it's I think X-axis moves the needle in the business, and the Y-axis. So X is enjoyment, Y is moves the needle. And then you put in those quadrants, you list the things that you like doing, you don't like doing. And then that what each quadrant then does is creates the blue and the red creates a job description for that person, right? Yeah. And then you take that and you put it up on Upwork and you find someone to, or split it into some roles and you do it. The green time is actually, doesn't move the business a lot, but it's like stuff I love doing, like surfing, right? I just love surfing. It doesn't move the business, but it helps me mentally. And I think you got to have that balance of all and really try and spend a lot of time in the black and the green time and leave the blue and the red for someone else to move the business. So
I love that. And whether you have the color or letters or numbers, it doesn't matter. But yeah, there's definitely going to be that stuff that you do that you just love doing. Maybe it's not quite going to move the business forward, and it could be something in the business, right? Maybe you're a house flipper and you love to tile. It just gives you the best and most and biggest enjoyment. Well, you're going to just continue to tile the bathrooms. That's okay. Give everything else, but that's fine. If you really love it, go ahead and do it.
But guess what? To tie back to what we were saying earlier, if you look back at those Gantt charts, those quarterly, you will see things shifting out of that black time or that number 10, and it will shift down to the blue or the red time. And you'll now your 10s become bigger and your black time becomes even bigger. And you look at, and this is the whole point of this story, because we've been known you for 5 years, you've come a long way. You know, I bet you your 10s and black times look completely different today than what they did back in 2008, what they did in 2018 when we had you first on the show. Yeah. So it's great to see that evolution. And it goes back to where I asked that question, what are you going to do in 10 years? I don't know, because we'll see, you know, but I'm going to do the things that I know that are going to help me let go of that, but making sure you're consistently checking in with yourself and understanding what those 10s, what that black time looks like for you in the day-to-day business to help you keep growing as an entrepreneur.
Yeah, you're going to be doing the things that are adding value to your life and others, right? I mean, that's the goal. That's the quote unquote American dream, to be able to do those things that are adding value to your life and other people's life, and be able to create that freedom. For me, that's the freedom. It's not the freedom to go buy a Lamborghini or a Corvette. Like, I don't care about that stuff. It's the freedom to be able to do what I want and when I want, and really enjoy life and be able to create an impact.
Right. Completely love it. So, mate, at the end of every show, we love to dive into the top 5 investing tips. You ready to get into it?
I'm ready. Let's do it.
Mate, question number 1, what's the daily habit you practice to keep on track towards your goals?
Boy, and I've actually fallen off of this, so I need to get back on it. So I'm glad you asked, but I like to get up every morning and I read and journal. I also do some not big exercises, but I do some minor exercises, some push-ups, some pull-ups. I've got a messed up back, so I do a lot of core. And so that's kind of my morning routine that I really love to do. And like I said, I got to get back on it. Kind of been hit or miss a little bit lately, but I think that really helps me set my day up. Awesome.
Question number 2 is who's the most influential person in your career to date?
There's a lot of very influential people. I'm just going to go ahead and say a person that really changed the way I think fairly recently. I guess it's been a while now, but it's Trevor McGregor. A lot of people know Coach Trevor McGregor. I hired him to really beat my brain up, and he did it in a good way. So I would say he's been very influential lately. A lot of authors and just a lot of people I meet. I try to be very open to hearing what other people have to say.
No, I've had Trevor on the show a few times. He's a very influential man, and for people who definitely don't know who he is, Trevor McGregor or Coach Trevor, definitely check him out. Question number 3 is, what's the most influential tool in your business? So tool meaning a physical tool, it could be a phone, a journal, or it could be a piece of software that you just can't run the business without. What is it?
I would say it's actually Zoom. What we're on right now. Zoom has been very influential. I've used it a lot more lately too. One of my main jobs is investor relations, and sometimes you're meeting somebody from California or from Texas or wherever, and I'm based in Minnesota. So I love Zoom face-to-face. I feel like face-to-face is the best meeting you could possibly have. I would love to meet them and physically shake their hand, but if we can't, Zoom has been very influential. And so I do a ton of business on Zoom.
That's awesome. Yeah, I think Zoom has been, since the pandemic, just going from leaps to strengths and bounds forward in terms of what it's achieving and how it's getting people to connect across the globe. So love it. Question number 4 has been, what is the number 1 piece of advice you could give to your younger self?
Always stay uncomfortable.
Always stay uncomfortable.
So easy to get fat and happy and think that you've achieved something. But in my opinion, for me at least, I create the most amount of joy and happiness in my life when I'm achieving more and more things, or doing more and more things, or disrupting more right? And so I need to be uncomfortable at all times to be able to do that. Otherwise, I'm not stretching myself. I'm not growing.
No, I love that. Always be uncomfortable. Question number 5 is, mate, where can people reach you to continue the conversation that'll be in your sphere? Where do they go?
Yeah, thanks for that. So EndurusCapital.com, ENDURUS capital.com. It's Todd at EndurusCapital.com. They can reach me on Facebook and LinkedIn as well. Send me a direct message, DM me, because I'm really bad at accepting friend requests. So tell me that, hey, I heard you, you and Reed chit-chatting and want to connect. Otherwise, I probably won't connect with you.
Mate, I'm sure you're getting plenty of DMs these days. Well, mate, look, I want to thank you so much for jumping on the show again after all these years. It's great to have you back. It's great to see what you're doing. Some of the things I took away from today's show, I think, is your consistency around being sticking around the hoop and knowing your journey, your story, and becoming from a high school teacher through 2008, through fix and flipping into what you're doing today. And then having that impact, or the realization that, I definitely connected with you on the letting go of the big 10-year goals and just knowing that you're living more in the present because you don't know what 10 years is going to bring you. I also think that your thoughts in and around the economy and where we're going and how to stay nimble with a recession. We're already in a recession, or how long this high inflation, this high interest rate environment will be, I think is also extremely important to being diligent in your acquisition process. But with that being said, mate, thanks again. Did I leave anything out?
No. If you did, just rewind and re-listen, guys.
Exactly. All right, mate. Well, look, enjoy the rest of your week. We'll catch up very, very soon.
Sounds good. Thanks, Reed.
Well, there you have it. Another cracking episode jam-packed with some incredible advice from Todd. Remember, if you do want to check him out, go to enduruscapital.com. That's ENDURUS capital.com. That's Todd at enduruscapital.com. He's also all over LinkedIn and Facebook. Remember to DM him to get involved in his sphere and check out what he is doing in the Midwest. I want to thank you all for taking some time out of your day to tune in to continue to grow your financial IQ, because that's what we're all about here on this show. To like this show, just give it a 5-star review. It's the easiest way to give back, and we're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.